Joe Mullen, welcome to the show. Firstly, Joe Mullen, who is Liberty Finance and sales manager state in SA and Northern Territory.
SA, Northern Territory in Western Australia.
But let's just clear something up, Joe. My link there is to Adelaide United, and having done some research, Googling's a fantastic thing, isn't it? Firstly, you're a fine vintage, 1964.
Absolutely. Yeah.
Adelaide City, between 1983 and 1986, played 334 times, scored 75 goals, 70 of them were spectacular. 2008 to present is the Adelaide United youth coach.
That's right. I've had a big involvement with football, or Australian soccer, football as we know it, for many, many years as a player with Adelaide City, and now, of course, in the coaching ranks, too old to run around and do all those things, but happy to direct, and it's a terrific club, terrific involvement, and it's been good.
And doing a sterling job. I do not know where you find the time, but we certainly do appreciate you being with us today, because I know you're straight off to the airport after this. Do appreciate you being with us, Joe.
Right. And tell us a little bit about Liberty Financial.
Liberty Financial, it's a specialist lender. It's been operating now for about 11, 12 years. It's probably one of the only or few non-bank lenders that's survived the showers of the global financial crisis, and we've been able to come out the other end by offering still residential mortgages, commercial mortgages, as well as debtor funding, invoice discounting, and motor vehicle finance as well. So we've been around for those 12 years, and we've come out of a pretty difficult period, a little bit stronger, better, and a lot more wiser, of course.
Joe, Bettina alluded to the fact that with non-conforming lending, you take on people with poor credit rating, potentially, and you know, I don't know if you saw the streetwise, but there's just that seems to be that fear factor, and certainly when you think about non-conforming, would it be fair to say that people just automatically go across the same thing, America, and we shouldn't be getting involved with it? So why would someone like Liberty take on people with poor credit ratings?
I think the most important thing is that we do a proper assessment. We have risk tools to assess our customers. Customers get into financial difficulty for a various number of reasons, and I think the most important thing to understand with the customer that comes to a place like Liberty Financial is it may not be their fault. There might be, as Bettina mentioned before the break, there might be things in their life that's happened. Emotional trauma is what she called it, and it's so very true. It might be a breakup of a marriage, it might be loss of a job, it might be sickness or death of a family member that's caused a problem for them to meet loan repayments with other lenders. As a result of that, of course, they get defaults on their credit file, and they're not nice people. They want to pay if they can. What we do look at, what Liberty looks at when we do an assessment of a customer is, okay, what has actually happened? What's the circumstance in the life of that customer that's caused them to have the poor credit file? And we look at that, and then we have a look at, most importantly, well, what's changed? What's happened now? Have they got another job? Is there something else that's different in their circumstance? Once we get an understanding of that and the profile of the customer, we can then say, well, habitually they want to pay. We can show that through through their character, and then we will advance funds based on those assessment tools.
Okay, so what kind of problems, I guess, would you accept in a client's credit history?
We'll go from anything from arrears on their mortgage, something more serious such as defaults or judgments, ATO debts, anything that they have struggled to pay. We will have a look at their credit file. It may be, in fact, that they've been made bankrupt. And as long as they're discharged from bankruptcy, we will again have a look at that customer and certainly apply the same philosophy, and that is that what's changed, what's actually the circumstances that's changed before we will advance the funds. So we will have a look at somebody right from just arrears all the way out to maybe they've been discharged bankrupt.
But it has to make sense, as you say. If it's just a blip and they're back on track, and it's almost like, not that you're forgiving the blip, but you're accepting of the blip, and they're not, as you mentioned, habitual defaulters or whatever.
It must make sense, Simon. We won't advance any funds to anybody if it doesn't make sense to us. I think it's very important. What we also, one of our main lending policies that we have in place is there must also be financial benefit in it to the customer. We won't just write a loan just for the sake of writing a loan. They must have a financial benefit. For example, if a customer wants to refinance their mortgage and consolidate a whole lot of debt, credit cards, motor vehicles, etc., but we're putting them actually in a worse position, so they're paying more money because it can be a higher interest rate, then we will not do that loan just for the sake of doing it.
And does that make sense? And it does cover off on the question that was raised at Streetwise that, the lender's the one that benefits, the lender's the one that benefits, but clearly you do the analysis at the outset and make sure that there is a benefit there. So whilst it's non-conforming lending, it's still prudent lending.
It has to be prudent lending. The regulatory bodies, no doubt, are watching non-conforming loans, whether they're low doc loans or whether they're just normal, fully verified loans to the customer, and rightly so. We like to consider ourselves corporate white knights with our lending philosophies, and we stand by that for sure.
Joe, what about security for these types of loans? Is there any difference between these and prime loans?
There's not. We will take any security that we can, of course, value and take security over. Obviously, for a residential mortgage, it's usually a property. We will take, for invoice discounting, we'll actually take security over a business's book debt. So we will actually finance their trade debtors or their receivables within their balance sheet. We'll take a chattel mortgage over a motor vehicle if we're doing a UCCC motor vehicle loan. So the security, if it's there, we will have commercial mortgage, commercial property, shop, warehouse, whatever. So we will take any security that the normal banks would take as well.
Are there age restrictions as well on them?
There certainly is. At the younger age, you must be by law 18 to borrow. So that there certainly is one of the rules that we have.
That's
must be 18, but exactly. But that is the only age restriction. We will look at any other customer out there, no matter what other age they are.
Final one from me, Joe, is about you touched on yes you can lend against commercial properties.
Yes.
I'm almost seeing that client is potentially a low doc lender as well. So you've got a commercial property and a low doc lender with potentially a default on there, and there's still that opportunity through Liberty to secure a loan.
There is. With a low doc, particularly on commercial now, we will actually go a little bit further than just take a self-certified income. We will actually ask for BAS statements. We'll have a look at BAS statements of that company or that individual if they're self-employed. We'll have a look at gross sales, less non-capital purchases, less any directors' wages or salaries. Then we'll use that net result to work out or annualise the payment, and if that then matches up with their self-certified income, we'll use that to make sure that they can actually service the debt. Like you said at the start, Simon, we don't want to get in a position whereby in the States a couple of years ago, real subprime lending was a cause of a lot of problems, because we still securitise our mortgages, and as a result of that, we need to apply proper due diligence when we lend.
Yeah, good to hear. And just lastly, do you have any tips, I guess, for potential non-conforming clients out there?
Look, if they have had problems in the past and they are getting a second chance with a non-bank or non-conforming lender, then certainly they have to do their utmost to have the faith that the brokers put them into that loan to do their best to repay that debt. Of course, we won't refinance habitual people that have defaulted on more than one occasion, so we will give them a chance, but certainly that is the only one after that they will get.
Common sense approach by standard. We have got emails coming in. Steve Hendon, can you use a non-conforming loan to secure a marquee player in the A-League? You can tell our producer follows Barcelona and he's up at the moment. I doubt that's a yes. I won't bother you with that question at all. We will, though. Thank you for joining. We would like to thank you, though, Joe. I know you've got to be at the airport. So Joe Mullen from Liberty Finance, thank you for being part of your net profit.